Hi everyone, today we are going to be focusing on one of the most powerful tools any equities trader can have in their arsenal, market net flow. I want to go into great detail on every feature and component that market net flow has available to help everyone get a better understanding of what it displays and how it can give us a significant edge when trading. Before we get too far into it, we do need to talk about some basic terminology first. So, MarketNet Flow is showing us all of the calls and puts occurring across the entire market on any ticker that is optionable. And so some basic terminology we need to be aware of is what we mean when we say long. And long is just a financial world way of saying bought. And short is just essentially equals to sold. So if we say long calls, that means we're buying calls. And if we say short puts, that means puts are being sold, and those are both bullish. And if we're saying short calls, so sold calls, and long puts, which are bought puts, those are both bearish. So when we see the green line in market net flow, it's going to either mean long calls, it's going to be the difference between long calls and short calls. So it's going to be the difference between bought calls and sold calls. And when we look at the red line, it's essentially going to be the difference between bought puts and sold puts, aka long puts and short puts. And then lastly, on market net flow, we have this white line, and that's just the price of SPY, which is the S&P 500 ETF. It also correlates to SPX, which is the main indice, and even ES, since all of those tickers track the price of the S&P 500, which is essentially the top 500 equities that drive the market. And market net flow can give us a lot of insight into many tickers, but it really does work wonderfully with SPY. So that being said, let me just show how that looks on the chart. We could see we have market net flow here, and if we want, we can make it full screen. And again, we have, if we narrow this stuff down, we have the green line, which is showing net calls across the market. We have the red line, which is showing net puts across the market, so bought puts minus sold puts. And then lastly, we have SPY's price. So everything that we're seeing here combined are those three main things. Now, another thing that market net flow shows us is, let me just minimize this here, is algo flow. And essentially algo flow is the sum of net calls and net puts across the entire market. Now, this is actually shown in the background, and there are different areas you could find this if you go into the ticker dashboard and look at options. And in this case, I'll pull up SPY. You can also see algo flow here. Now, the difference is between looking at SPY and looking at market net flow is we're seeing algo flow for the entire market. And algo flow actually came before net flow, and it's essentially the sum of net calls and net puts. It combines those into one line for us so we can see if that's increasing or decreasing, and we could compare that to the price of SPY to see how the market's stacking up according to SPY's price. And typically these will act as a leading indicator. So if I minimize this stuff here, we could see these bars in the background is algo flow. So we could see algo flow started off bearish for the day, and then it shifted bullish. Now, if we overlay that with SPY's price, you can see SPY's price was dropping. And then when the equity shifted bullish, so did SPY's price. And then as that sort of drops down, so does SPY's price. And this is the power behind it. Since we're tracking all of the equities on the market, we can see how that directly impacts SPY's price. And typically, not always, but typically, these will act as a leading indicator for us to give us an idea of how the S&P 500 is going to move. And not just the S&P 500, as mentioned, other tickers as well. So that's the meaning behind those. Now, another thing that we should point out before we get too deep into this and start talking about strategy is what we can view with market net flow in terms of history and option expiration. So not only do we have to focus on bought calls and sold calls, bought puts and sold puts, but there's also expirations that all of these options come with. So we can change that if you're mainly scalping and you're really focused on the short term and you just want to see option expirations that are expiring within the next 7 days. Up here you can choose 7, and this will show all of those short dated expirations. You can also change it to 15, and you can see how the lines are changing as we adjust this. We can change it to 30. And then there's the default view, which is all options across all expirations, which is how it looks by default. Now, it is important to keep in mind you should never just focus on one view. It's always very helpful to see what's happening across different expirations. Some traders do prefer to focus on 7-day expirations, but despite that, it's always important to check what's happening across all expirations because all options contracts do influence the way the market's going to move and the way SPY is going to move. So that's why the default view is no filtering. On top of that, if we want to see what's happening historically to get more of a bird's eye view, we can set the history to 2 days cumulative. We can set it to 3 days cumulative, and it really starts to paint a different picture. So instead of starting at 1 day and increasing from there, we could start 3 days back and see how this has been increasing. And you can see how things were pretty flat, but then as calls increased, so did SPY's price. Now, this is sort of a big, this is skewed here because of FOMC, meaning that happened on, this was on July 27th, 2022. And the FOMC announced that they were going to raise it 75 BPS, and then that's what the market expected. So it started moving, but we could see how calls confirmed that price action historically. And then things went a little flat. Despite that, though, puts didn't really move much, and calls were slightly moving more, so SPY kept moving more. We could see over here there was a little bit of a sell-off, which is sort of making up for that FOMC imbalance. But looking at this historical view can just help paint a picture of what's to come and how all of this cumulative net flow adds up and how it might affect price looking forward. So those are some important options that we can tweak, and it's a good idea to help get a more of an overview of the entire flow coming into the market. So the other thing that market net flow shows us is momentum. And the way momentum is calculated, it says right here, takes the current net flow minus the average of 60 minutes in net flow. So in summary, it's the current value minus the last hour by default, and it's typically used for scalping. So that's shown down here at the bottom. This is the momentum shift. And let me just refresh this just to make sure that me changing the chart around didn't skew it too much. So we could see that by default, we have it set to 60 minutes. Now you can adjust this to 45 minutes. You can adjust this to 15 minutes. And that's basically the shorter time frame you use here, the more signals you're going to get. And what I mean by signals is you can see when we have this adjustment here. So when momentum is bearish and then it shifts bullish, we get a green dot on the chart. Now, if you're a scalper, you can use this to line up an entry. And I'm going to mention this a few times in this video. You should never just jump right in based off one signal. You should always pair this with some technical analysis, which we'll get into shortly. However, this would be your first sign of a bearish indication that it would be a good time to start to try to join this uptrend on this momentum shift. And this is currently set to 15 minutes. And that's what's important to note. The shorter amount of time you use, the more signals you're going to get, and therefore the more false signals you might get. So you can see we had a bearish signal here, although, and this actually would have been a good one. But then down here we get a bullish signal, and yep, you do get a little move, so that would have worked out. But despite their not, okay, over here is a good indication of a false signal. We get this bearish signal on this slight momentum shift on the 15-minute, but you can see that would have resulted in a loss, and that's why it's very important to take into account other factors more than just momentum. But it is actually a nice indicator, and you can see how when I shift that to the 30-minute, that false indication goes away, and that's by raising the time frame on momentum, you're going to get less signals, but you're also going to generate less false signals. So it's sort of a balancing act, and it's something that you should toy with and back test if you're interested in using that as part of your strategy. So now that we've talked about most of the main components here, I want to talk about some extra features that market net flow gives us. And one of those really nice features is support and resistance, and also can plot gamma exposure for us. So up here, we can click this hamburger icon, these line icons, and this will plot algorithmic support and resistance for us. And this shows that you can actually use these lines. So if you like trading, and this is how I prefer to trade, is trading level to level, you can actually plot these lines on the chart, and you can see where resistance is going to likely come into play, and then eventually when resistance gets broken, it will act as support, which you could see right here. Once we break above it, we retest, and then we move higher off of it. And so You can plot these on your own chart, but if it's helpful to you or you have difficulty plotting levels, I highly recommend giving these a try. And you can find this in other places on the site. Again, on the options dashboard, you can choose support and resistance levels, and you can see them here as well. But it's convenient that we have them on market net flow. And also on top of that, if you want to look at gamma exposure levels, and gamma exposure isn't something that we should really get into too far in this video, because doing so, it's just such a big topic. It's a whole nother video. It actually warrants probably another 4 videos on its own. But if we were to go to the options dashboard, you can see all sorts of information about how market makers hedge, gamma exposure, Vanna exposure, charm, things like that. But where we have these really big gamma levels, where we're likely to see areas of reversals or levels that may act as magnets, it will plot those for us. So you could see by putting on the gamma exposure levels, it plotted this level right here, which right around 412, which turns out did actually act as a magnet for the day. It was a big gamma level, and you can see even though SPY's price started down here, we ended up working our way up to here. Now, that's not always the case, and it doesn't plot every gamma level, it just plots the ones with the most amount of gamma exposure. So it's always good to check the dashboard, but it's definitely a handy feature to turn that on, and you don't necessarily trade those the same way that you trade this support and resistance. Like I said, it mainly acts as magnets and reversal points, but it's nice, and you can have both on your chart if you prefer. Just know that the more levels you have on here, the more it might skew the price bars on the page. So outside of support and resistance, another thing that we can show on here are moving averages. And these moving averages can act as dynamic support and resistance, or entry and exit points. So, and this is just standard technical analysis information here. So you can do this on your own charts as well, but it's really nice because these will be plotted for us automatically. So we have the 20 period moving average, the 50 period moving average, and the 100 period moving average. So after 20 ticks on this chart, essentially, after 20 data points on this chart, we get our 20 moving average. And notice how SPY's price will come down and test that moving average and bounce off of it. So that's acting as dynamic support and resistance. And you can actually see that happens 3 times here, which each one of these could have been an entry. Of course, you'd want to be looking at your bar chart to make sure that you're getting wick confirmation and things like that, but that's a very useful feature for this. And then you can see, once we have enough data points, we can plot the 50 moving average and then eventually the 100. And one way this stuff can be used, as you can see here, when we break below this 20 moving average and we're testing the 50, we get that cross of the 20 and 50 moving average, and that could be a put entry right here, where you're going to buy puts, or if you're trading ES or micro ES, you could short futures here, and you could have taken a nice short off of that cross. And of course, if you're playing crosses, you always want to make sure that you exit when it crosses the other way. And again, over here, we get all the moving averages crossing, which is considered to be a very bullish signal. And if you just look at this chart and backtest this stuff, you can see how these do indeed act as dynamic support and resistances as well. So there's several ways you can use those, and that's built right into market net flow for you as well. So those are some basic strategies we can use, some basic technical analysis features. Now, I want to talk about some of the other stuff, which I use heavily in my trading, and I highly recommend that if you start using market net flow, that you start to incorporate these in your trading as well. So getting right down to it, and if you ever are unsure what these strategies were and you don't want to reference this video, you can always look at your default view from market net flow, and it references the strategies right over here. And then you have your buttons for moving averages, support and resistance, gamma exposure up top. So the first one I want to talk about is a market net cross, and that's what we get right out of the gate here. We only had one of these today, and that's because it wasn't a very volatile day. It was a very tame day. The price was slowly moving up. But when we see calls cross above puts, so net calls cross net puts, that's a very bullish indication. And now we don't want to look for just, sometimes it will cross and then fall right back below. What we want to see is we want to see it blast right through, meaning some distance gets created when it does cross. And when you see that, that's a very bullish indication to enter calls. Of course, if puts were crossing above calls, then that would be a very bearish indication. And that's when you see that, you don't want to, again, you never want to jump in right away, but at that point you should be figuring out how you can time your long entries, how you can time your call entries to take that position. And that's one of the best signals you can get from market net flow. And we already talked about momentum, so I won't go into that too much more. But another thing we can look at is divergence. And this is a nice example of divergence here, where we have SPY's price falling. Now we do have calls and falling and puts rising, but they go flat, right? If we were going to see SPY's price continue to fall, we would see more movement. And what happens is SPY's price continues to fall right here. However, calls started rising again, and puts were still pretty flat. So that starts creating divergence. And at that point, because SPY's price is diverging from what net flow and algo flow are telling us. And so at that point is where you should start considering. You don't, again, you don't want to jump in right away, but start, if you're in shorts, maybe start closing those out. If you bought some puts, maybe start taking profits, and then start looking for a point where you can take a long entry if you see price start to reverse. So we have this moving down, and there are several ways you could have seen this through technical analysis, but even just on this chart, we can see we get a bit of a double bottom on this chart, and then it starts moving up again, and then that's right around the time you'd want to take your entry. And we were clued in that this reversal, that we would start moving up again because of the way net flow looked. It remained bullish despite SPY's price falling. And that's divergence is another very powerful strategy. And then lastly, when we talk about market trend, there's a couple ways to use this. If you envision a trend line, and I'll have to take a snapshot here and I can start drawing this, but if you take some trend lines here, so we have calls trending up, and we have puts are just flat, so that means we're in a bearish state. And so we could actually draw a trend line here, and you can see every time, so as calls continue to move up, every time SPY's price, so we have our first touch of the trend line, our second touch of the trend line. Every time we touch this trend line, we could take entries for calls. That would be one way to play this. And then of course, you have your longer trend lines, and you have shorter trend lines that you could also play as you see them pop up. Now, that's one way to look at it. And then another cool thing I've actually seen people use to great success, and I don't know, there's not a good indication of it on this chart in particular, but oftentimes if you see, you can draw trend lines on the net flow lines as well. And when you see trend line crosses, meaning SPY's trend line crosses one of the net flow trend lines, that can be an indication to take calls or to take puts depending on the net flow line that SPY's trend line cross. So just something else to pay attention to. But there's plenty of other strategies you can work with, and all of those are very powerful. Now, I see this all the time, and it's something I can't stress enough. And so people might ask, why aren't we just watching net flow? Because there is net flow for SPY, QQQ, IWM. Why aren't we watching net flow for these main ETFs and using that instead? And I mean, you can even see it in these screenshots here, but essentially what's happening is the entire time SPY's price is moving up, net flow is extremely bearish. And as net flow becomes more and more bearish, SPY's price continues to move up. And you might think, oh, that's divergence, I should look for a short entry, but that's not the case. And the reason being is right here, because of hedging. SPY and these main ETFs, SPY, QQQ, IWM, they're used for hedging, not just for hedging SPY and QQQ, but they're used for hedging all sorts of tickers. So if you have big money, smart money taking positions, say they're buying a whole bunch of Apple stock and they want to hedge those positions, they'll go in and buy puts on SPY. The reason why they'll buy puts on SPY instead of buying puts on Apple is because if they bought $1 million worth of puts on Apple, they might drive Apple's price lower. However, since SPY is heavily weighted on its holdings, which is the whole point behind market net flow, we're watching the underlying holdings that drive SPY as opposed to watching SPY itself. They can drop a whole bunch of money. They can buy a whole bunch of puts on SPY and not impact the price at all. And you can see the whole time puts were rising, and you might think that this put buying here impacted SPY's price, but that's not the case. It was actually this call selling here that across the market that impacted SPY's price. And you'll see that all the time where millions of dollars of puts are getting thrown at SPY, yet SPY continues to move higher. And that's because SPY can handle that sort of, it's perfect for hedging activity because they can throw large orders at SPY and not impact its price at all whatsoever. So whenever you're playing SPY or QQQ or IWM, any of these main ETFs, it's very important to not watch their direct net flow, but instead to watch market net flow. Now, that being said, if you're playing an underlying holding that's not an ETF that's typically used for hedging, then watching net flow for that particular ticker is perfectly fine. You can even watch both its net flow and market net flow, since typically a lot of these stocks are tightly correlated with the market anyway. So it's always good to watch both, but never ever ever use SPY or QQQ's net flow to trade those tickers. It will misguide you. It will cause you to lose money. Now, as mentioned several times before, we should always combine this with our own forms of technical analysis, whether that be volume price analysis or pattern trading, or whatever strategy you prefer. It could be harmonics, it could be Fibonacci, Elliott wave, whatever. All strategies work well, and this is just an example how of some volume price analysis stuff combined with a little bit of pattern trading, how you could be watching market net flow for this and basically find entries off of some standard technical analysis points, which I don't want to get into too far here, but I did want to just point that out. Always combine market net flow with your favorite technical analysis strategy, and you will have amazing results. Now, the one thing I want to talk about too is, and this goes hand in hand with back testing and applying your strategy, is that you can look at historical dates to see how market net flow reacted. So you can click up here, and this is a little bit different than clicking history down here. So if we click here, we can go back to specific days and see what market net flow looked like, and then we can go on our charts and we can practice with that. And the difference being, so let me just flip back to today. And up here, if we can just remove the query string from the URL, go back to the default view. Now, the difference between looking at cumulative history is that when you change it up here, you're still looking at 1 day of net flow data, whereas here, this is adding multiple days of net flow data, so 5 days of cumulative history, and seeing this over the course of 5 days. And this isn't just showing us that 1 day where we might want to do some back testing for. So if you want to look at it historically in practice, use this little calendar icon in the top right corner. So that's really covers most of it. The one last thing I want to mention is in the Discord, you can actually go in there and run some commands to get the same results, whether it be algo flow or market net flow. So just to show you what that looks like, and you can see the commands listed here. If we run market net flow, so we can do T net flow market, and then we can specify cumulative history. So I'll do 2 days cumulative history, and then I'll say show me 15 days expirations, and we can type that in, and the Discord will give us that data as well. And then another thing, you can see that pop up here, and this looks the same as the website. Just you can get basically do all the same stuff you can do on the website, but then you can also use algo flow, where you can say algo flow market, and we could say 3 days historically, 30-day expirations, and this will pull up algo flow with the data that we're requesting here. And just know that the more history you give on it, it could take a little time to crunch it, but you can see, okay, this is how algo flow, which is the combined sum of net puts and net calls, looked for the past 3 days cumulatively. And of course, it just confirms what we've been seeing these past 3 days, which is the market rallying. So that is pretty much it. If you have any questions, feel free to reach out in the Tradytics Discord, or leave comments, or Tradytics Twitter, and there are many people that would be very happy to help and answer any questions that you might have. Thanks for watching.